All right, welcome to The Explainer. Today, we are diving into a really interesting macro report that points to one specific week, the second week of December 2025, to be exact. The claim? This single week could be a massive turning point for the global economy, and you guessed it, for crypto too. So what's the big deal? Let's break it down.
So you might be asking yourself, why that week? I mean, what's so special about the second week of December 2025 that has everyone on the edge of their seats? Well, according to this report, it's not actually about crypto itself. It's about a single decision that's going to send ripples through the entire global financial system.
Okay, it all comes down to this one little number, 0.25%. That's the interest rate cut that pretty much everyone, we're talking big banks like Morgan Stanley, JP Morgan, is expecting from the US Federal Reserve. Now, in finance speak, that's a dovish move. It just means they're trying to give the economy a little boost. But here's the kicker. The number itself? That's only half the story.
All right, let's look at the global economic picture here, because a decision this big, well, it doesn't happen in a vacuum, right? To really get what's at stake, we've got to zoom out. And the picture this report paints, it's one of a global economy that's, well, pretty tense and divided.
So, inside the Fed itself, there's this huge debate going on. You've got two camps. On one side, you have the hawks. They're screaming, whoa, hold on. If we cut rates now, inflation could come roaring back. Then on the other side, you have the doves. They're saying, but if we keep rates this high, we could crash the whole economy into a recession. So the big decision really boils down to which one of those fears is stronger.
And this isn't just an American story. The report points out that this tension is playing out on the world stage. You've got the US getting ready to cut interest rates, but at the same time, a bunch of major European central banks are just holding steady. And that creates a really risky imbalance. The report uses this great analogy. It's like tilting a giant table. All the cash could suddenly slide from one side of the world to the other. And you can imagine, that would cause a lot of chaos.
So, okay, we've got all this policy uncertainty. But wait, there's more. The report says there's another layer to this whole thing, a kind of hidden risk that could potentially derail the entire financial system. They call it the double bubble.
Yeah, the double bubble. This is a term that comes from the Bank for International Settlements, which is like the central bank for central banks, and it describes a super fragile situation. The idea is actually pretty simple, but it's also kind of terrifying. You have two totally different major asset classes that are both way overvalued at the same time. And the danger? If one of those bubbles pops, the shockwave could instantly take out the other one. We're talking dominoes, leading to a massive crisis.
So what are these two bubbles we're talking about? Well, the report points to two things. First, red-hot tech stocks, which have just been on an absolute tear. And second, believe it or not, gold, the classic safe haven asset, which has also been climbing like crazy. So you've got two completely different assets, both looking like they're stretched to their breaking point.
And this chart right here, it shows us a potential trigger. Remember that tech stock bubble? Well, according to the report, a huge part of that is being fueled by massive corporate debt, especially in the AI space. You can see it right there, just climbing and climbing. Basically, a ton of money has flooded into these companies way faster than they're making profits. It's a classic setup for a fall if investor sentiment suddenly changes. Okay, so we've got all this high-stakes drama playing out in the traditional markets. The big question is, where does crypto fit into all this? This is where it gets really fascinating, because crypto is stuck right in the middle, at a real crossroads. So crypto is in this really tricky position, right? On the one hand, a rate cut is fantastic news for the space. Lower rates make assets like Bitcoin look way more attractive, and it could unleash a flood of new money. But, and this is a huge but, crypto is still basically tied at the hip to other risky assets like tech stocks. So if that tech bubble pops, the report is pretty blunt about it, crypto is almost certainly going down with it.
So, based on everything we've talked about, the report says this all boils down to three possible scenarios for how that week in December could play out. Let's walk through them.
Okay, this table lays it all out really clearly. The best case scenario, the bullish one, is that the Fed not only cuts rates, but also signals that more cuts are on the way for 2026. If that happens, you could see a really strong recovery for Bitcoin, and that classic FOMO, or fear of missing out, could send altcoins flying. Now the middle ground, the base case, is the Fed cuts rates but sounds pretty cautious about the future. That would probably mean a small recovery for Bitcoin, but nothing spectacular. And then there's the bearish case. Any bad news, a bubble popping, the Fed suddenly getting worried about inflation again, could trigger a sharp drop, tons of liquidations, and just straight-up market panic.
So, with so much riding on this, what are the actual signals you should be watching for during that week? The report gives us a pretty handy checklist. First up, the Fed's official statement on December 10th. It's not just about the rate cut. The words they use will be huge. Of course, you want to watch the big inflation reports, the CPI and PPI. But also, keep an eye on the price of gold and the US dollar. Those can be like the canary in the coal mine, giving us an early warning. And last but not least, look at the leverage levels in the crypto market itself. If there's a lot of leverage, any little dip could get magnified into a huge crash.
And this really brings us to the final and maybe the most important point in the whole report. Even if crypto gets a nice little boost from all this in the short term, the bigger picture is what matters. This quote says it all. The era of easy money, of super low interest rates that have basically fueled the growth of all risky assets for more than a decade, well, that era might be ending.
And so that leaves us with this final, really big question to think about. As the world's central banks kind of run out of road with the policies they've been using for the last decade, crypto is going to have to find its way in a totally new environment. So the question is, what does that new world actually look like for crypto long after this 1 week in December is over?